Hello viewers, in this video we'll be going over the S&P 500 ETF ticker symbol SPY. In this video we'll be going over the day-by-day probability model, how we find the models, and the day-by-day forecast for the S&P 500. So back to the technical analysis. Today we're down 73 basis points at the moment. We are currently touching oversold RSI on the 1 hour chart, and we are approaching 1 hour or negative MACD. If we expand out to the 4 hour chart, we are also approaching negative MACD, and if we expand out to the daily chart, we are resting on the 9-day moving average, or this blue line, and I do see a possible next support will be the 18-day moving average, and we also start to see a divergence on the daily MACD. We just got out of the overbought RSI, so I do see the S&P 500, if we were to close below the 9-day moving average, to see the next support on the 18-day moving average, or this purple line, which is around the price of $326.95. So that will be our first immediate support. We do see a slight price concentration around that range as well. As for resistance, if we do manage to reverse and close above the 9-day moving average, the next resistance will be the all-time highs of $332.95. So if we were to move up higher, that price movement is roughly around 1.14% to the upside, and to the downside it is around 65 basis points. So back to the day-by-day probability model, if we check it out. So as the day progresses, we see a slight favor to the upside. We do see a 71% in the 0 to 2% standard deviation. The first standard deviation, on extreme case, we have a 5% chance of going higher, between 2 to 5% chance higher. As for the other side, between 0 to negative 2%, we have a 24% chance, and on the extreme side to the downside, there's no indication of that happening. So back to the day-by-day probability, or day-by-day forecast. Again, this model is now available in the link below, so do check it out. So we have 1 day out, 2 days out, 3 days out, 4 days out, 5 days out, 6 days out, and 7 days out. So which one of these models we should focus on? Ideally, the model that is best matched to the current trend. Right here we have the current trend, and below is the trend that I believe is the best match. This trend dates back to April 9th to July 7th, 2014. So let me point out why these two charts are similar. So what we have on the current trend, we start off averaging above the middle Bollinger Band in the first segment, and then we take a slight dip below the middle Bollinger Band at this instance. Afterwards, we do see it average above the middle Bollinger Band once more, right towards the end. So we see those points there. Now in the trend in question, we start to see a similar pattern. Right at the beginning, we see it average above the middle Bollinger Band. We see it revert back to the mean to the middle Bollinger Band. Afterwards, on the very last segment, we do see it average above the middle Bollinger Band. So we have about 1, 2, 3 points. We also have 1, 2, 3 points. So there's reason to believe that the trends and patterns are the same. The outcome and forecast should be fairly the same. So the model that we just examined was April 11th to July 9th, 2014. So back then, if we can find it, so back then the S&P 500 was up around 28 basis points. So if we go back to the day-by-day probability model, it does coincide to this first standard deviation to the upside. It is 71% chance of it happening, so the S&P 500 may head a little bit higher in the next coming days. So again, this model is now available in the link below, so do check it out. If you enjoyed this content, feel free to like, comment, subscribe, and thank you for watching.